What's up? It's Blake here. As always, none of this is financial advice. Trade and invest at your own risk. We're going to get it started here with the S&P, and this video is designed to help you get prepared for this week's of trading. So, without further ado, let's get it started. S&P pulled up here in a daily time frame, and you guys know I have been bearish really since we broke the 50-day moving average back here. Got bullish when we hit this uptrend here. Then once again, we were bull flagging right below this cloud and got bearish once again. And this has been a very tough year. This does not look constructive. You know, I hate to be bearish. You guys know I love trading the uptrends and being swing long with leverage. That's how we make our money. And right now we're just not getting that. The market's not giving us that. And we've only had 2 uptrends this year. You know, we're into May, so we're moving along right along in this year with only 2 uptrends, and really one of them was fruitful. This uptrend paid very nicely, and hopefully you guys were able to capitalize on this uptrend. This one was quick, short-lived, had 3 days that you could have gotten and scaled, but if you didn't have stops in at your entry, you probably would have gotten stopped out if you didn't scale. So really only 2 opportunities for us this year to really get paid. And with this price action, this looks extremely bearish. And I like I said, I hate to be bearish. Because when everything looks extremely horrible like it does now, typically that's when the market likes to flip a switch and reverse and, maybe reverse back to this cloud again and roll over again and finally break this pivot. Who knows? And it doesn't matter either, right? The only thing that matters is price structure, and trend. And we know how to trade that. And right now the trend is a downtrend and price structure is bearish. So with that being said, if you're trading and you're trying to be aggressive, you should be focusing on the short side of this market. And maybe you were able to take the the Qs or the IWM last week in the playbook, and that worked out really nicely. But if you didn't, like me, that's completely fine as well, because as these prices continue to drop, eventually we're going to have odds in our favor. We're going to have an uptrend. We're going to have rules to trade, and I'm going to take full advantage at a discount, right? Instead of getting in up here or up here, we'll be getting in at lower prices. Cash is a position. So if you're waiting on the sidelines and being patient, that's the ideal scenario right now. I think this market can go much, much lower. And the reason that I say that is, well, basically based on technicals and price structure. It's very simple. The weekly time frame, we're breaking the 50-week and price weakness confirmation. You can see last week's candle on the S&P gapped down and closed on the lows, closed on basically the February lows. On the S&P, the Nasdaq's even worse. So these this cloud is applicable to all time frames, and we primarily use it for the daily for our swings. It's a 5 and a 10 moving average. And on a higher time frame, the weekly, this does not look good. And we can zoom out also on a monthly time frame. We have confirmed downtrends on a daily, weekly, and monthly time frame. That's not bullish, right? And you can see we pull out the MACD. You guys know I like to trade with MACD for momentum. Well, guess what? Now the momentum is in favor of the bears on a monthly time frame. So, over the course of the rest of this year, I'm not really expecting a whole lot. I tweeted out that there's a, in my opinion, likely, if I had to guess, maybe an 80% probability that the highs are in for the year. This probably isn't going to be a stellar year for the market, and we can already see that. And so how do we position ourselves and how do we prepare for the rest of this year? Well, it's with low expectations, and it's with protecting capital. As you guys can see, we're doing that in the investment portfolio with a sizable position in commodities, and we're not really trading anything that swing long because the market's telling us, hey, now is not the time to be swing long. So over the course of this year, yeah, I would not be surprised by any means if we come and test the bottom of this cloud, which is 342 on the SPY. We're at 412 right now. And that would have been, the breakout highs essentially from the February, after we rebounded the COVID lows and broke out from this previous high. That's really where this cloud lines up. And, if you think about it, it might make sense to get back to these levels and retest, all of that, stimulus that was just injected into the market. So yeah, higher time frames, the monthly looks very bearish. The weekly, we're in a confirmed downtrend. MACD momentum heading lower. And then as you guys know on the daily, we're confirming price weakness. This does not look constructive. So bigger picture, macro picture, expectations for this year, extremely low on equity markets. S&P, NASDAQ, Dow, small caps, don't have very high expectations this year, just because I feel like this topping pattern is kind of an unwinding that we've been seeing take place over the better part of really 8 months. So that being said, protect your capital. Wait for uptrend. Wait for higher odds. We will get them, and when we do get it, I guarantee it's going to be a face ripper. You better be ready to get in when we have rules to get long, because we could easily short squeeze right to a 50-day or some key levels. So keep that in mind. When we do have uptrend, I will be getting in, but I'll be getting in with tempered expectations, because the higher time frames are still in confirmed downtrend. So really it'll just be a relief rally that I'm looking to get into, and I'll be looking to scale quickly and put in my stop at my entry as soon as I can scale. So just being very technical and precision oriented with this market, and very risk averse. So this week, don't really have too much too high hopes for this week of the market. And you guys will probably see, we've been taking it very easy in this market, not in a rush to do anything, and for good reason. You guys can see this market just continues to chop around and then dump when it wants to. Bitcoin, you guys know I'm big into crypto and the Web3 space. Bitcoin, still, it's basing, it hasn't fully broken down. I don't love this price pattern. This price pattern is bearish until we can get back above 43,000 on Bitcoin. So until we can get back above 43,000, I don't have very high expectations for Bitcoin either. And really, we need to get back above this pivot high, which is 48,000, before we can really start to think about getting bullish again. Same thing with Ethereum, very similar story, very similar price pattern. One thing that I've noticed with the crypto markets and equity markets, it seems to be that Bitcoin specifically, just because everything trades in the crypto market with Bitcoin as its trading pair, Bitcoin moves the crypto market. So when Bitcoin is up, the rest of the crypto market is generally up, and vice versa. But one thing that I've noticed with the correlation with equities is that Bitcoin seems to give a little bit of like a signal as to what the market might do the next day. So it seems to be like Bitcoin is just one day ahead of what the market is going to do that day. So if Bitcoin's down on Monday, I wouldn't be surprised to see the market down on Tuesday, and vice versa. If the Bitcoin was up on Monday, I wouldn't be surprised to see the market up on Tuesday. Just something that I've noticed. These markets technically aren't correlated, but obviously, there's a lot of liquidity and, people that are investing now in both of these different markets. So, liquidity flows is one thing to consider. Just something that I thought was interesting. Obviously, we got to take a look at gold, because we do have a sizable position in gold in our investment portfolio. So, gold is in a downtrend. It's just difficult to puke out here. It's very gappy. We were able to capitalize on this run. And then, when we were holding this cloud, this looked like consolidation to me. But giving up this cloud with this gap is not good. And this is a bear flag on the daily time frame. But if we zoom out, right, take a look at the monthly, we're still above the cloud. We're still testing these previous highs. MACD is still curling. So really no technical damage there. And, similarly with the weekly, I don't love this. This next week is going to be really important for me. I would like to see us close back above this cloud, back above the 180 level. So back above 180, I'll be getting probably longer gold. But if we start to break, some of these lower levels in here, 166, probably that bets off on gold. So we'll just have to monitor this. Hate to blow out of it here, because it is a hedge against equities, and you really can't park your money in equities right now, because this just looks absolutely ugly. And okay, you want to take a look at bonds. Well, bonds look even worse because of what's happening with rates and yields. So very difficult to find a spot in this market to park cash, which is why cash is a position. So yeah, if the market gets really ugly, if this really looks like, hey, it's full on bear market, we're gonna roll over, which I'm gonna tell you, we're really close to that scenario. If that does happen, maybe we'll take a look at some inverse index funds. But yeah, until that happens, we're just gonna stay hedged with some commodities and try to limit our equity exposure, and obviously try to be in the strongest of the equity groups in the indexes, which is the SPY right now. So with that, yeah, kind of I'll leave it with you this week I don't have very high expectations. As I've repeated, we're in a very strong downtrend, and odds are favoring lower prices. This price structure is very ugly. But just as I always say, just when things look extremely bearish and they're just like ready to roll over and really tank, that is when the market likes to trap as many bears as possible and just do a face-ripping rally, knock out all of these people that got short in here, move prices just above to hit the cloud, and then roll back over. So I'm expecting volatile markets. I'm expecting, very, very strong intraday movements. The VIX is above 8 or above 30. So yeah, play accordingly, right? We're going to have large, swings intraday in this market. Definitely going to be opportunities for day traders. I probably will be taking a look at, some 5-minute day trades on the short side with NASDAQ futures. And if that's the case, I'll call that out. And, maybe we can have a couple nice shorts together as a team. But if not, just make sure you're preserving that capital and you're protecting that capital and being patient and waiting until the odds are in your favor, because right now this is not in our favor on the long side. So y'all enjoy the rest of your weekend, and I'll see you on the open.